Today I'm going to be talking about first year income tax filing for single member LLC or sole proprietorship Amazon seller businesses. As I mentioned, this video is specifically for those who are selling as a single member LLC or a sole proprietorship. And that means that you're going to have to file a Schedule C to show your income and expenses from your business. It's not a separate business tax return, it's just a schedule on your Form 1040. So whether you had a profit or a loss, that will all flow into the main part of the 1040, and it'll either increase your income or decrease your income, and then it'll all be added together to get your total income that you'll be taxed on. All right, so let's get started. We're going to go to Amazon Seller Central and we're going to pull two different reports. So if we go to Amazon Seller Central and log in, the first place we're going to go is to Payments and then Reports Repository. When we get to Reports Repository, we're going to select Account Type, All Unified Reports, and then Report Type, Summary. We're going to select Summary, and then we're going to do Date Range. So let's say you're doing taxes for 2024. We're going to go ahead and select the range from January 1st, 2024 to December 31st, 2024 and click Request Report. While we're waiting for that report to generate, we can go over to the menu and we can go to Reports Tax Document Library, and then we can find our 1099K. So if you have a 1099K, you'll see it here by year, and then just click Download PDF on the year that you want, and then you'll have a copy of that on your desktop. Now we can go back over and check for the report that we started downloading, which is in the Reports repository, and then click refresh to see if it's ready. And once it is, we can click Download PDF, and then we can open that, and then we'll have that report on our desktop. So now we got two different reports. We have the Amazon summary statement for the entire year, and we have the 1099K for the entire year. All right, now that we got our reports downloaded, let's look at the information on the reports to see how we're going to use this information to complete the Schedule C. So on your Amazon summary statement, you're going to see a lot of numbers here. But what the important numbers are the ones down here at the bottom of each section, income and expenses. So you'll see this total income number, 86,212.57, and then your total returns and allowances is 4,093.41. So these numbers are really important because this shows your total sales, essentially your taxable income, and then your returns and allowances, which gets you to your net sales. And then on the other side, you're going to see the total expenses. So these are essentially all your different Amazon fees that Amazon charged you. And if you have advertising that you're paying for directly through your Amazon settlements instead of a credit card, it'll be shown here. And it's important to know that you should segment that out if you see that there is a cost of advertising being deducted. Now, the actual cash transfers to the bank don't matter. You're actually just going to be reporting on your income and your fees. But there's another thing that you need to look at, and you'll see similar down here, there's this tax section. But on the 1099K, this total includes sales tax collected, meaning sales tax charged to customers. And if that amount is charged to customers, it's also paid by Amazon. However, you don't want to report less than what's on the 1099K because then you might get a CP 2000 notice from the IRS, and that means that they can send you a notice saying you've underreported your income. So it's important to take this number of sales tax collected and add it to the total of the income here before you deduct returns and allowances. That'll make sure that you're reporting the correct amount on the Schedule C. Now let's take a look at the actual Schedule C and see where those numbers go. So this is the form Schedule C, which is part of your 1040. So there's basic information at the top, which includes the name of the business, the EIN, and things like that. But in this video, we're just going to be focused on where the numbers go. So those numbers that I told you, the Amazon total income and the Amazon sales tax collected on the 1099K, should go here on the gross receipts or sales line, which is line 1. And then the returns and allowances should go on line 2. So if you look back at these reports, you'll see 86,212.57 plus the 5704.12 should go on the Schedule C line 1, and then on the returns and allowances 4,093.41 should go on line 2, returns and allowances, and that will give you a net amount on line 3. But since you've added the sales tax collected of 5704.12 to the line 1 on the Schedule C, you have to make sure to also deduct it on line 23, because Amazon has collected the sales tax that they've charged the customers, but they've paid it out directly for you to the various states that it's owed to. So I've showed you where to enter the total sales and the sales tax collected and the sales tax paid, and also the returns and allowances. But what about the Amazon fees and the advertising? So the Amazon fees net of the advertising, meaning this number 29,287 minus any advertising that was charged directly from your settlements, would go on the cost of goods sold line item, which is line 4. And that's not a direct entry. It's actually on this cost of goods sold schedule here, which rolls up. So there's this section which is other costs, line 39, and you would enter all your fees that are charged by Amazon on that line item. Now, if there was any advertising that was on that settlement that you need to enter onto this Schedule C, you'll pull that number directly from your cost of advertising here, and you'll go and you'll see that there is actually a line for advertising, line 8 on the Schedule C, and that's where you're going to enter the advertising number. And if you obviously have other advertising that's charged directly to credit cards, you're going to enter that too, but I'll show you that in the next step. Now that you've entered your Amazon sales, your returns and allowances, your Amazon fees, and your advertising from the settlements, now you need to organize the rest of your expenses. And there's a worksheet in the description you can use that you can click on the link and make a copy of this Google Sheet and then use it to organize your own expenses. So the next thing that you need to do is cost of goods sold, which means you need to figure out what the total cost of your inventory was that was sold during the period for the tax year so that you could deduct it. Now, just as a reminder, purchasing inventory is not a tax deduction. It's only purchasing inventory and then selling it. So you can only deduct what you sold. And so on this worksheet, there's a formula. Now, if this is your first year, your total beginning inventory is going to be 0, but then you're going to sum up your total purchases. So whatever you purchased in 2024, you would enter in this worksheet. And let's say it's $50,000 in inventory that you purchased, okay? And then at the end of the year, which is exactly on 12/31/2024, what else did you lay money out for? So what's in stock at Amazon and what is in production or in transit to you that you've already laid out cash for, and you're going to total those costs. So let's say that's $25,000. Now you can see that the formula has automatically calculated that cost of goods sold is $25,000. The formula is beginning inventory plus purchases minus ending inventory equals cost of goods sold. So now that you have your cost of goods sold number, let's see where to put it on the Schedule C. So if you look at the Schedule C, there is again that cost of goods sold line item 4, but it all rolls up from this Part 3 cost of goods sold worksheet. So you've already added your other costs, which is your Amazon fees, and now you have to add your cost of goods sold. Now, as a small business, you're not required to enter your beginning inventory, which is 35 or 41, but since you've already calculated that, it's a good practice to do so. So you're going to add your beginning inventory number here to line 35, and then your purchases, which is line 36, and then you're going to enter your ending inventory on line 41. And now your cost of goods sold should tie out to 42, which is your cost of goods sold number that's calculated on the worksheet plus your Amazon fees is the total that's going to be on line 42, and that rolls up to line 4 on the Schedule C. So now you can see on the Schedule C you have your gross receipts or sales minus your returns and allowances. That has a total. And then you have your cost of goods sold. And when you subtract that from the net sales, you get your gross profit, which is going to be on line item 5. Now that you have your gross profit figured out, from your gross profit, you have to deduct all your other operating expenses to get to your net profit. And on the Google Sheet that I've put together that you can find in the link in the description, this is a place where you can organize all your expenses. Just as a reminder, business expenses that are ordinary and necessary to run your business is what can be deducted. So you should never be trying to deduct any personal expenses. You can't deduct a personal expense just because it's run through a business account. It needs to actually be a legitimate business expense, something that is ordinary and necessary to run the business. That's the IRS's standard, okay? So if you look at this worksheet, you'll see that there's various different categories. And the first one that I put together is the Amazon advertising if paid directly with a credit card. So if you paid directly with a credit card, not on the summary statement, you can enter that here. There's a line item for non-Amazon advertising, and there's a line item for marketing. Now, there's only a advertising line item on the Schedule C, so you can just aggregate all those things and put it on the same line because there's no line for marketing. And now I have various different other categories that you can use to organize your expenses. There's one that's called contract labor for US-based contractors. Remember, if you're paying US-based contractors, you need to issue a 1099K if you meet the threshold in that year. I'm sorry, a 1099, not a 1099K. A 1099 for NEC, which would be non-employee compensation, if you're paying US-based contractors a certain amount in a year. So you can enter all your expenses on this worksheet and pull them together. And then you'll see on the Schedule C, there's various different places, like line 8 for advertising, line 11 for contract labor, and so on and so forth. However, there's a line item for other expenses, and everything that isn't going to a specific line item would all be lumped into other expenses, and then you would have a statement. So if there's other things that don't have a specific line item here, you would attach a statement to the tax return, or your software would help you organize that into a statement and show line by line what are the total other expenses that you're adding. Now you'll see on the organizer there is a insurance other than health. That is for insurance like liability insurance, but then there's also a deduction for self-employed health insurance. That doesn't go directly on the Schedule C. That goes on a separate place in the tax return, and you can use your tax software to guide you, but just make sure that you're not trying to deduct self-employed health insurance for yourself directly on the Schedule C. And then lastly, there's this line item that says equipment less than or equal $2,500. Now, if you're buying something like a laptop and it's around $1,200, for instance, you can deduct that directly in full in the year that you purchased it under the safe harbor election for small taxpayers, meaning you can expense it directly rather than depreciating it. But if you purchase something that's over $2,500, you can either use Section 179 expense, which is a full deduction of that amount, but you have to make the election to do so, or you can depreciate it over a period of time, and you'll need to use your tax software to guide you on that because there's separate depreciation schedules that will flow into the Schedule C. It's not going to be a direct entry on the Schedule C. So now we've talked about adding your income minus your returns and allowances, minus your cost of goods sold to get to your gross profit, and then adding your operating expenses to get to your net profit. So pulling that all together, let's take a look at the Schedule C. You'll have your total expenses here on line 28. And then when you take that away from your gross profit, that'll be your tentative profit and loss, which is line 29. It's tentative because that's prior to your business expenses for use of home. So on line 30, you'll see expenses for business use of home. And I actually have another video that explains that, and I'll put a link in the description to that. Now, besides that business use of home deduction, there is one other deduction that we didn't talk about, and that is the vehicle expenses deduction, and that's on line item 9. Now, that's also a separate schedule that flows directly into the Schedule C, or it's actually a part of the Schedule C, which is part 4, and you'll see information for your vehicle. And most people do track their mileage, and so you're just going to be entering your total mileage and then your business use mileage, and then based on the mileage rate you'll get a deduction for that. And there's a few questions that you have to answer here on the Schedule C, like when did you place your vehicle in service for business, how many miles did you drive for business, and how many miles total, and then was your vehicle available for personal use during off-duty hours, and then do you have another vehicle, and do you have evidence to support your deduction, and is it written evidence? So you do want to have written evidence because the IRS will audit that, and they'll look at that and make sure you actually qualify for this deduction. It has to be contemporaneous, meaning at the time that you actually took the mileage. So I recommend using like the QuickBooks app that has a mileage tracker that can be done automatically, or something like Mileage IQ, or you can simply have a written log that you keep in your glove compartment. That's fine too. Just make sure that you do have written evidence to take that deduction. So once you pull all those deductions together, including the car and truck expenses on line 9 and your business expenses for use of your home, you get to your net profit, which is on line 31, and that is the profit that will be subject to self-employment tax. Now, to wrap it all up, I've showed you how to do this on a Schedule C just by showing you the form. Unfortunately, this video is not a specific video on how to use a software like TurboTax or any other software in order to prepare your Schedule C. The reason why is because actually it's quite confusing to enter these numbers into TurboTax sometimes with their workflows, especially the income related to the 1099K and the Amazon summary report. Because they have these various different workflows. So as a tax pro, I use direct entry software, which allows me to enter these numbers directly and then review the forms to make sure everything's flowing through correctly. But at least this gives you a pretty good idea of what you need to do. And if nothing else, maybe it just gives you an idea of how to pull together the information that you'd need to give to your CPA if you're having somebody prepare a Schedule C for you. But if you need help with your income tax return, you can go to sellercpa.com and book a call, and we are taking on new clients for income tax. If you found this video helpful, go ahead and like and subscribe because I'll be producing new videos like this every week.